You are listening to the Marc Guzman podcast experience.
So let's get right into our building analysis now.
Okay,
So
great.
what are we going to analyze today? It's a fourplex, right?
Yeah, so a lot of the times I've been analyzing different properties that are currently on the market. And many of you who watch the show, what you realize is I'll advise a lot of my clients that I've sold a 4-unit building to, or an 8-unit or whatever type of an apartment, to not get attached to that property, but to be able to be in a position to, as we're raising rents and increasing the value, to resell it so we could exchange it into something else. So this particular property we're going to analyze today is an off-the-market deal of from a client that I personally sold the property to about 5 years ago, and has since expressed, hey, what do you think the property would be worth now, and what could we 1031 exchange it into? So long story short, it's a 4-unit building built in 1980. And I sold it to the client about 5 years ago. And after just going through and evaluating the property, and again, this property is not yet priced, but based upon that client following the rules of engagement and making sure that the rents are steadily increasing. Again, they're not overly excessive, but they have very stable tenants. The property has actually gone up several $100,000 from what she originally bought it from. In fact, she bought it for $415,000, and I'm pricing the property today between $810,000 to as much as $856,000. Now, the unique thing about this property was built in 1980, so it's a newer property. It's comprised of 4 units and a 5th illegal unit, which is actually not on public record. So it's on public records. It's a 4-unit building. So not only could this property be purchased with 25% down, non-owner occupied investor financing, but it can actually qualify for an FHA loan. And in fact, the client who I sold it to bought it with a 3.5% down FHA loan. And because it had that extra 5th unit, she was able to live there, and until she moved out and bought a home and collect rent from 5 units. So the current gross rents of the units are $6,700 a month. Now, again, this is Richmond, so there is rent control. So there's going to be a bit of a disparity between what the market will bear. In fact, the market will actually bear $8,750 a month. So there's actually a loss to lease there of roughly 23% or 24%. And again, because it's rent control, you can't just go up 10% annually. And so the question is it a good investment at $856,000? Now, quick, simple answer is yes. The reason being is that, one, from an investor standpoint, if you're coming in with 25% down after all closing costs, you're going to need about $235,000 without changing any of the rents. And just financing a 75% loan to value with a 25% down, you're actually at a 1.20 debt service coverage. Now, what that means is when you calculate your mortgage with today's prevailing interest rates on the 75% of the purchase price, your net operating income, that's the income left over after all expenses but before you make a mortgage payment, is actually 120% greater than your proposed mortgage payment. So that's a good thing on its own.
Now, one thing I want to say before we continue on is about the illegal unit. So many of you have heard me talk about some of the difficulties and some of the problems you can run into with illegal units. Now, if you buy this property and you move it into that illegal unit yourself, you're fine, no big deal, right? It's your property, you can do what you want. If you decide to rent out that illegal unit, number one is you want to talk to an experienced property manager or an experienced real estate attorney that can tell you the various different pitfalls with illegal units.
Yes.
Most of the time, everything's okay, but there are certain little intricacies in some of the legal things that can happen. And also it depends on the city and how the city themselves view illegal units. So depending on where the property is located, you definitely want to talk to an attorney and an experienced property manager to properly guide you if you decide to take that illegal unit and rent it out.
Yeah, and it's really what it comes down to is disclosure, right? So as you can see, I'm making it extremely clear that this is that additional unit. So for valuation purposes, it's not going to count as a 5-unit building, although there is the possibility of that additional income, or the possibility of you being able to live in that unit, especially if you're buying an FHA, which puts you in a position where you're pretty much a very, very reduced rent for the simple fact that you have 4 other units paying you rent. Now, if you did decide to buy this with an FHA or 3.5% down, you would need as little as $53,000 to buy a property between $810,000 and $856,000. Now, the difference in those two prices is that right now at $856,000, which is kind of what the property would pencil at, it comes in at roughly a 5.68 cap rate, a steady, solid 5.68. It has a 1.2 or 120% debt service coverage ratio. And when you look at the overall ROI, remember that because of the interest rates being very stable, again, this is all based on the current existing rents without changing anything, you're at a 7.53 return on an investment, or ROI. Now, the ROI would take into consideration paying the mortgage. However, if you turned around and bought it and occupied it, instead of needing $235,000, you would be able to get in with, as I mentioned, as little as 3.5% down, but you would have a mortgage or an actual rent or cost of living somewhere between $850 to $900 in a pretty large studio, as a matter of fact. And again, as Marc had brought out, there are certain pitfalls that could occur if you're renting out an illegal unit. And what that literally means is that it's just not either declared on public record, so it's not counted towards the square footage of the overall building, or there was something built about it improper, like the electrical or whatnot. Now, the good thing about this is that it would have been the unit, the additional studio, actually is built to the proper standards. I don't know why the original owner who added the studio didn't decide to just go and get it permitted, which you could do. It is possible to do.
I was just going to bring that up too, because depending on how it was built, and if you have a proper contractor, especially during your inspection period, go in and take a look at it, they could easily give you a quote for getting that permitted, and then you could do it after the fact.
Right. Yeah, it is possible. I mean, but it does have an advantage to the fact that it has a 5th unit, but on public records it's 4 units, for the simple fact that because it's 4 units, it can qualify for FHA. If it was a 5 unit, it would suddenly fall into commercial financing, where you would need a minimum of 25 or more like 30% down or greater.
So here's a question for you then. So let's say I buy this property, and let's say I decide to sell it in 4 or 5 years. Should I leave that 5th illegal unit as illegal, because then I could possibly market to both the 1 to 4 unit buyers and the 5 and higher?
Actually, that was my suggestion 5 years ago. In fact, I have a lot of history with this particular property, because I originally sold this particular property back in 1996 when it was just originally a 4-plex, and I sold it 2 or 3 times after that. And then somewhere on the 4th or 5th buyer, they added this illegal unit. And then it came back around, and I realized, hey, this is the same 4-plex that I sold, but now it has a 5th illegal unit. And that very question came up. And because of the fact that it was disclosed to all the buyers, and we went around all the proper parameters, because they dealt with experienced attorneys and brokers, and disclosure was not an issue. And the fact that it wasn't something that was falling apart, that was done improperly and was a potential fire hazard, all of the prior owners benefited from that. So it really depends on the owner, but it was, it did allow for a very marked difference or advantage to it being a 4 unit when it came to 4 unit financing versus the the conventional commercial 5 unit or more financing. In fact, if the property were at fair market rents, it would go right up to an 8.26 cap, and it would create a huge value add to the property. So again, it's a 1980 building, so it's a newer building relative to some of the other 4-plexes that you'll see out there that were 1945, 1910, 1920, maybe renovated. And then in addition to the fact that you've got 5 units, you also have 4 enclosed garages. And as you can see from the picture, it's even nicely fenced with the gate. And the landscaping is non-existent, it's all cement. So the maintenance cost on a property like this goes down very, very low. Like I said, it's currently off market. So if you guys are watching this and you're paying attention, feel free to reach out to us. We haven't exactly priced it yet.
Okay. Now, And that's one thing that's very funny about multi-family properties is that there's a lot of multi-family properties that are sold off market, not necessarily on the market, right?
Yeah. Well, to bring that reasoning home, this individual, she moved into it, but she has since moved out and bought a home, as I mentioned earlier. So from in her portfolio, it's a non-owner occupied property. So if she sold it, she would be subject to a huge capital gain unless she 1031 exchanged it. Now remember, as I mentioned in prior episodes, the value of a property is really governed by the income that it generates. That's why we call them income properties. And so the property justifies its high asking price because it makes the money, as opposed to other 4-unit buildings that are just maybe looking at high price selling apartment buildings and using that as a comparison and not taking into consideration that the rents are really low. And that's what distinguishes a good investment buy from a bad investment buy. It's not necessarily the price, especially with what we talked about earlier with the yield curve inverting and the prices of the interest rates becoming very, very stable, if not dropping again. Now, all of a sudden, you should not just take into consideration cap rate to begin with, but now ROI is becoming a very prominent factor because the power of leverage is beginning to come back.
That's very good information. So